Today we're going to see about the new concept of a absolution. Absolution is a meaning is a one existing company take over the business in a one more of a existing company. It means A company take over the B company, they will run the business. So before the amalgamation means two or more company combined together, they will form a new company. But here they will take over a company, they will run it out. This is the concept. Now about this concept, observation, we will move on to the sum. Now we're going to see about the question number 26. X company agree to acquire the asset excluding the cash on the year of 21 as a Y company. That means Y is a selling company, X is a purchase company. So they given as a Y limited of a balance sheet. Next, what are the adjustment they give? First one is a cash payment of rupees of the share of the Y. So new company share value into 4, we have to find out the cash for the purchase consideration. Next one, the issuing of the one share of each 10 for the market value of rupees 12.50 is a X. For the old company it was a 10 rupees. But the takeover company will have a 12.50. It means here 3 lakh. So 3 lakh divided by 10, we will get the share value. So 30,000 into 12.50, it will be the equity share value. Next one, for debentures we will never take it out. Next one is a expenditure of the Y limited rupees 4,000. So given the journal entries in the book of both the companies. First we want to find out the purchase consideration. Next we have to find out the realization account. Next we want to find out the share of the price we going to be purchased. Next both the company journal entries. But in this question they given an int as a cash in hand which is not taken over, assumed as a paid as a creditor. It means we have to not mention a cash of the previous company. This is the explanation of the question. Now we will move on to the answer. First step, we want to find out which is a selling company, which is a purchasing company. In which company balance sheet is mentioned, that is a selling company. So automatically next company is called as a purchase. So here selling company is a Y, purchasing is a X. So first step we have to find out the purchase consideration. So in question explanation itself I told the equity share 30,000 into 12.50. If you calculated, the value will be 3,75,000. Next step, cash 30,000 into 4. How we have found it out? In adjustment they have told the cash payment of rupees 4 of every share of the Y limited. So from this 30,000 into 4. So 30,000 into 4, 1,20,000. We have to add both the things, 3,75,000 plus 1,25,000. The value will be 4,95,000. That is a purchase consideration. Now we are moving to the ledger. The ledger account in the books of Y, that is selling company. So here we have to check out from the balance sheets given by the textbook. And we're going to be mentioned. So realization account, many times I've told, realization account means the asset side will come into a creditor, debtor, and liability sides go by the creditor. So the items, whatever, everything we have to take but except the cash. Here we can add our expenditure, it's given in an adjustment. So here goodwill 60,000, land and building 1,20,000, plant and machinery 2 lakh, stock 80,000, debentures 30,000, expenditure 4,000. These are the asset value that's given in a textbook. Automatically we are moving to the liability side. So debentures 50,000 and we have find out our purchase consideration value, that is 4,95,000. Now we are going to tally up. So 4,95,000 plus 50,000, the value will be the 5,45,000. So from here we want to find it out what is a different value, that is called as a balancing figure 51,000, that is a profit of the selling company. It is clear? It is a profit of the selling company. Next, after the realization account, we are moving to the equity share account. So, equity share account, we have found it on a working note of first step 30,000 into 12.50. Here we are going to be mention it. So, the two equity share of the purchasing company is X Limited. 3,75,000. Now here realization account profit value or realization account 51,000. In case it is a loss, we have to showcase in our debtor. It is clear? Next one, general reserve profit and loss. It's mentioned in the textbook. And equity share capital was a previous in the balance sheet of the Y Limited 3 lakh. Now we are going to be tally all the values 51,000, 80,000, 60,000, 3 lakh. The answer will be the 4,91,000. From here we are going to deduct this value. You will get it as a 1,16,000. That is a balancing figure. We will showcase as a cash. Till this I am thinking you are clear. Now I am moving to the next step of a equity share of the Y company. So Y company, we're going to tally which price they're going to be get it, which shareholders equity share they're going to be hold. So purchase consideration of the equity share value is a 3,75,000. So that going to be transferred to the, this is a transfer value that for the X company. Both the things we're going to be tally. Next, so here we have to find out the, so here we have a differentiate of the equity share and the cash. So now we are moving to the goodwill. Goodwill in X Limited. So here realization account value is a 4,95,000 and equity share capital value 3,75,000. So different amount is mentioned as a goodwill, other name of a cash. So it's a, when we, how we found out the cash value previously, 30,000 into 4. That is we mentioning as a goodwill of a X company. So if you tally it, you will get the both the values same. Next step, we are moving to the selling company journal entry, realization account. Realization account, what are items we have calculated in a ledger? First one, goodwill. It is in a text balance sheet, previous year balance sheet. Next, land and building, plant and machinery, stock, debentures, and cash or expenditures given in a adjustment. If you tally up this all the value, that is a realization account 4,94,000. It is clear? Now we are moving to the next step. First step we have completed our asset side. Next step, debentures is there. So debentures account debtor to realization account 50,000, 50,000. That is kind of a takeovering the liability. Next, you can ask me, ma'am, why we have not taken a creditor? So they have mentioned it, we have takeovering the cash as a creditor. So that reason we have not mentioned here creditor value. Now the company going to buy in a which value? X company limited account debtor to the realization account. We have found it as a, before itself the purchase consideration value 4,95,000. Next one, realization account for the shareholders old. So profit of the realization account 51,000. Next, equity share account 3 lakh, general reserve 80,000, profit and loss 60,000. If you add all the three, you will get it as the equity shareholder account 4,44,000. So next, final one is how we going to transfer our equity share to the X Limited. So equity share of the X Limited is 3,75,000 to the payable. Which amount we going to pay? 3,75,000. That is transferring the equity share. Now it's a payment, final payment, the opposite, equity share account, capital account debtor to X Company Limited 3,75,000. Now final, we going to write out our purchase company. So till now we have written for the selling company. Now only we are moving to the purchase company. Here we will write as a first journal will be the purchase consideration, business purchase account debtor to liquidation of a X Limited 4,95,000, 4,95,000. Next step, land asset and liability. Here land and building, plant and machinery, stock, debentures, goodwill of the balancing figure, and business purchasing debentures of the liability. If you want, you can mention here. And the next journal entry, it's going to be a liquidation of a Y Limited is a 4,95,000. How it 4,95,000 we got it as a equity share and the cash. Last of the payment debentures. This debentures in textbook, the last of the adjustment. See here they have given it as a 10% of a premium. So here is a 50,000. So 50,000 into 10 is a 10% means, so plus. So here I will here write the thing. So 50,000 into 10%. 0 0 cancel. So 5,000. So 50,000 plus 5,000. So you will get it as a 55,000. For purchase consideration, it was omitted. For journal, we have to do it. So 55,000. For the new company, it was a discharge like a 55,000. How you got it? Again, I will repeat. 50,000 of a debentures in a 10% premium. You are getting it. Till this, question number 26 have completed. Now we will move on to the second question of 27.